Welcome to Bears in Exile. Today is Sunday, March the 17th, and this is a quick hit on UUP. So we have noticed and noted that this whole run-up on the dollar has been very good to the market, which is very unusual, because normally it's the opposite. And on these days where we've been having some weakness, especially with that gap down on Friday, the market has struggled, which is very interesting. I mean, atypically it goes down, the market goes up, and that just hasn't been the case. So, it would be important to know what it should be doing next. We did have a huge NDE on Saturday with Cyprus confiscating money from its depositors, and now today it's also revealed that they are shutting down the banks for Monday and Tuesday, so that people can't get their money, which is really crooked and dirty. So, with that in mind, there's a strong possibility that people will flee the euro and enter the dollar as a seeking safety. But what does the chart say? Well, let's take a look. We had the big drop down on Friday. This is, in my opinion, deceptive. On one hand, you have everything going negative on the daily, even a first day downtick on the 14-day RSI moving average. Indicator-wise, UUP is primed to fall. And that would line up well with a retest of the long-term moving average bar and the 200-day moving average, which we've noted before. So that's entirely probable and likely in a normal situation, which, thanks to yesterday, is not anymore. Now, beyond that, what do we see? And this is probably, just a guess, the most telling thing. Okay, we have a downtick from Thursday. We gapped below it, so that is fixed. That is fixed. We ended up with a spinning top at the completion of that move, indecision candle. The most important thing here is we know that gaps fill. So we just created a new gap. Now that's not the only gap that's there. We have a small triple gap just above, small triple gap. And we know that multi-gaps are stronger to fill than normal gaps. Beyond this triple gap, we have a very large double gap. Double gap. So, bulb corrective move finished, multi-gaps immediately above us, and an event in Europe that could have a run to the dollar. Should this fill first before the 200-day moving average? I think so. And there's some speculation in there because this sucker is primed to go down. But NDEs trump all charts, and the chart does give us a reason for it to go up some. So I'm going in that direction. And I do believe that the market is going to get another bump up to the upside before it declines. So a move up in the dollar at this point, since the market is going up with the dollar, makes perfect sense. And I am in that mode of thinking at the moment. Although I could totally be wrong, and this sucker just goes down and the market has some problems. But I do think fill this gap, let the news calm down, let the banks reopen in Cyprus, and then, have some kind of ridiculous story about everything's okay, and then the dollar can go back down as people put their money back in euros. So there it is, just a little something, and but I am guessing a little bit about that move up. So something to watch in both directions. It's going to be fascinating. I mean, nobody knows what Monday's going to bring, but To me, that is very likely. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.